Hello everyone, this is Juan Sarmiento and today is Thursday, October the 15th. I have found no new trades. Perhaps the volatility is a little too high and so that precludes me from choosing any good trades. So we'll wait a little longer, see if the market tops out and gives us some opportunities there. Let's look at each position one by one and see what I want to do with it, okay? Let's go to Apple first. And I see that I have November 6th and November the 20th. So let's look at this November 6th shorts. Let's say add simulated trades and say we have 22 days. So that's plenty of time for me to make any changes. If they were expiring on October the if the shorts were expiring on October the 23rd, then I would do some changes. No reason to do any of that. So let's go to the risk profile here, and I see that we have our shorts are 105 calls and puts, and I see that we have some 102 longs. So these calls are very much, you know, below what I would consider a good price. Okay, so you can match the shorts and the longs at the same price, and that will give you a little money. So I want to do that now, and by doing that, look at my delta, $60 here, 59.61. Okay, if I do that roll up, I'm shorting. I'm closing the 102.5 calls, November expiration, November 20th expiration, and pull it up to the 105, and that gives me a little credit. Okay, so I want to do that, and look at the deltas. They actually decrease a little bit, which means we are taking a little profit off the table, and that looks fine. I want to do that, and at some point we have these calls at 200, 125. We can also take some profit there. Not now, or at least let me check this out first. Let's do this roll up and get to the $215 out of that. No more is $430 because there are two lots. So confirm and send. And this 125 we can close. Let's look at the chart. Okay, it may be topping out here, so we want to perhaps take a little profit. And look, earnings are coming up on October 29th. Before that, volatility might spike, so I want to take a little profit here. How do we do that? Well, we can roll this up or just close one of them. And if I close just one, it's still positive, you see, it's more neutral, and I like that. We're taking $490 out of it. Okay, I just had my other position, my other order filled. Yeah, so let's do this one here, and there we're neutralizing our deltas here. And what happens if we come to earnings and Apple drops 100 points? Well, we're gonna cash nicely on that. But if it goes up, we make a little money too. Okay, so I want to do this, and that's taking money off the table. My goal, as usual, is try to neutralize. I was close already, and it's very close to neutral. I like it a little positive because when the market goes down, your deltas depreciate, but your Vegas appreciate a lot. Meanwhile, if the stock goes up, chances are volatility would decline, and then I don't make so much money with my Vega side, but I do a lot with my Delta side. Okay? And so either way, we make money. That's the goal here. Okay? So it's neutralized. We're taking money off the table. You can go to the monitor tab and say, how much money do I have at risk? Well, let's click on symbol here, and here's Apple. And now my position is worth 1441 plus $1,000 in margin requirements. So that's how much I'm risking. It's about $2,400, and that's fine with me. Okay, let's continue on to the next trade, ATVI, and analyze that. And here we are very, very well. Thank you. November the 6th, that's 22 days to expiration. If you want, you can take a look at the monitor tab and go back 90 days, and then here's your trade history, and you can see what the entire sequence has been. So let's go. We enter the long here in August. Let's analyze trade, and then we did the put side and the call side separately. For the rollover, essentially we changed our shorts from October to November, and that's what we have right now. And in the process, we got some credit, which reduced our overall cost. Let's say analyze trade, and analyze trade, and we can hide the positions, and this gives us our balance here. What we have made in this position is $367. Okay, great. So we don't need to do anything with that. Let's go to Baba and show all. And here, November 20th, no need to do anything. There's plenty of time here. Let's take a look at the chart. Great. Earnings are coming up, and we have to be aware of that. What if Baba collapses here? We will be doing fine if it goes up. That's what the calculation you have to make. Also, if the volatility was something like this, at 70, you want to take profits. Anyway, let's go to the monitor tab, and here's my position. Okay, I entered it back in October the 1st, fairly recently. And so this is what we have, $252 in profits so far. Okay, let's move on to Home Depot. Same thing. Expiration is November, and the longs are expiring January. We may be losing money on this one. Let's go to the monitor tab. No, it's because we already did a rollover. So let's see what the two trades combined do for me. Let's say analyze trade first for the long side, and analyze trade for the short, and hide the current position. Okay, so we do have a little profit, and the resulting trade looks great. Okay, so it's delta, slightly delta positive, and of course Vega is always positive. Theta is a little negative, but that doesn't matter. That changes very quickly. And that's where we are. We are very close to the top of the range here. Okay, let's go to lows. Same thing. Okay, I don't think I'm going to change much. Let's go to the monitor tab, two trades. You can analyze trade and analyze trade, and that's a way to finding out. Instead of seeing the transform trade, we see the combination, and you can see here P&L from the opening, and yeah, we have a profitable trade. Okay, let's go to Nike. And we are here in the middle of the cone here. I don't know what's going on, so let's go to the monitor tab again. Here, October 23rd, okay, that is a different thing because there are 8 days to expiration, so we do want to do the rollover here. Let's go to the monitor tab, and okay, we have already entered a trade and whatnot. In this case, I think we have a loser. $325. That's not a lot. Let's take a look at the chart. Volatility is very low, but it's on the rise, so we might do okay. And we are here in the cone. So normally what I would do is, okay, let's wait until next week. but I have to promise to you that I will do this once a week. So in this case, you have to make the decision. Do I want to get out of it, or do we want to do a rollover? Okay, I'm going to do the rollover because it's not that much, but consider that when you do a rollover, you're adding to the risk. So you might say, "Oh, I don't want to risk it anymore. Consider a loser and and not do the rollover, but close the position." I'm going to do the rollover. Yeah, and this is the resulting trade goes to November. See, the October here is the current long. I'm buying those, the current short, I'm buying those back. And I'm going to put here November 20th. Okay. And $336 is my loss so far. So I'm going to give it another chance, even though I should. Look at the volatility of the options I'm selling is higher than the volatility of the options I'm buying back. Let's look at the chart once more, and you can see the earnings occurred not long ago. So yeah, volatility may increase and the stock actually might make a new high. So let's do that. Okay, let's move on to TJT. Okay, so here we have very close to delta neutrality, and we have October 145 put that expires tomorrow. And these are way out of the money. So unless tomorrow TJT open at 140 for some terrible overnight news, what I want to do is perhaps leave it alone, or we can sell puts that expire in November the 13th to match our calls. Okay, if I was doing this tomorrow, I would have no doubt about selling puts. Now I haven't because overnight anything can happen, but I'm going to sell anyway. Analyze closing, and I'm going to sell November. I'm going to sell puts. Okay, and that's $71 times 3. Look at what results. That is, if the stock was to drop, then I could lose big. If it was to drop half its value, I guess that could happen. Very unlikely though. Okay, so let's sell 3, and then we end up with 6 short puts and 6 long puts. So they compensate each other. So it wouldn't be a huge loss. Let's do that. And sold. And here it is. My maximum risk. We can go down to 140.8 and not lose money. We would lose our profit. If it fell here to 145, we'll be fine. Okay. And the stock is trading 165, so it's 20 points of safety we have there. But by selling some puts, we're getting some money back. Okay, this is a rollover of sorts. Obviously, I had done already the call side rollover and left the puts alone because they are so out of the money. But now, with only a few hours to expiration, I can just sell the additional November 13 puts, and these October 16 puts will expire worthless tomorrow. Okay, supposedly, if things happen as expected. Okay, let's go to UPS. Okay, in this case we have October 160. Okay, so we can do the same thing. Okay, let me just show you what I'm going to do. This will be safer to do tomorrow. Okay, but because I'm here. Okay. First of all, let's see what the trade looks like now. Right now, we have nice profits. The delta is negative. So what am I going to do? I'm going to roll over my calls and I'm going to sell puts. Okay, let me just explain. Let's cancel all this so I can show you what I'm going to do. We have the calls, 160 October calls. I'm going to roll those over. That means I'm going to move them from October to November. Let's say analyze rolling, and I'm going to go to November the 20th, and that's a rollover. Because my longs are here in January, I have plenty of time to do rollovers, and when I do a rollover, I'm collecting credit from, it's a time credit, okay? In addition to that, I'm going to sell puts, also expiring on November the 20th. And it's the same rationale as we just did for TJT. The stock is trading at 173 and my strike price is 120. That's 13 points ahead. So let's go to the add simulated trades, and I'm going to look for November 20th right here, and I'm going to sell puts. I'm not going to buy back the puts that I have because presumably they will expire tomorrow, worthless. But the 160 puts have that expire in November had a value of 4.11. Okay, now you can actually enter that in addition to the calls that we have as a single trade. To do that, it might be difficult to fill. If it's difficult to fill, you can do it as two sides. Let's see. Let's say control to make sure that it's added here, and click on the 160 put on the bid side so that we get shorts. There it is. And so here are the three things that I want to do, and look at the credits. That's $777 times 2. That's great. Let's lock it right there at 785. Okay, here's the risk graph, and it looks similar to the target, but I have all this room, safety room for tomorrow. Okay, if you have doubts, do it the next day, the Friday of expiration. You can do this kind of rollover, in which I'm only selling the puts. I'm not buying back the puts that expire tomorrow. If you do this on Friday, you can do it at any time, provided that the stock is not collapsing. Okay, let's do that. So it's safer to do on the day of expiration. Okay, let's go to the monitor tab and see how are we doing activity and positions. And it is there. If it is problematic to fill, to see how my credit is too high, change it down. And keep at it until it gets filled. Okay, so I'm gonna go further down, cancel replace, and go down, let's say 5 cents. Wait a little, wait a few seconds or a couple of minutes or 1 hour. We have plenty of time for that to happen. Okay, so let's do it again and reduce it by 5 cents. So long as it's not below 750, because that would be stupid. Let's go 775 until it gets filled. Okay, let's give it a chance, and you know that I will keep on doing this until it gets filled before the end of the day today. If that doesn't work, I can always do the call side first and then the puts. The puts are probably going to be easy to fill. How about we do that, okay? Let's go to the monitor tab again, analyze tab, and let's calculate the rollover for the call side, analyze rolling. Okay, and we're going to say November the 20th. Let's do the call side first and then the put side. Let's cancel that trade. It might get filled better this way, where you have only calls and only puts. Okay, let's do the call 75. Confirm and send. And we can just sell the 160 puts. Here, just click on the bid. And we're going to do 2 of those. $4. Let's do something in between 410, 424 and 420. Create duplicate. Let's do 410 first. And that failed immediately, so obviously it's the call side that is problematic. Okay, so we reduce that. Cancel, replace. 1, 2, 3, 4, 5. And obviously I want to get filled before the end of the day tomorrow. Okay, I want to do it before the end of the day today because I only want to trade on Thursdays. But if worse comes to worse, and I could always give it a try tomorrow. Okay, that's all for today. Thank you very much, and of course I will get it done even if you don't see that happen. Okay, thank you very much for joining me, and I'll see you next time. Bye bye.
Please be sure to subscribe to this channel by clicking on the subscribe button below. Once you have done that, be sure to also click on the bell so you get a notification of future videos coming up in this channel. Be sure also to click like if you enjoyed this video, and feel free to share it with your friends and family. Thank you very much.